What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with it's Ira Fishman, right? It's Ira. Is that your business? Yep. All right. Beautiful, beautiful. And it's awesome having you here today. I'm excited because I've got my very favorite audience member here today. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate investors, syndicators, and operators. And why do I do that? Part of it is because it's the law. Bigger reason is because if you're in the same industry, you got to find out if there's overlap. You got to find out what opportunities are there for us to work with each other. And in the meantime, you get to learn how to communicate effectively on the topic of commercial real estate, which is super duper important. But before we get too excited, Ira, can you please introduce yourself a little bit to the audience?
There, my name is Ira Fishman. I've been in multifamily real estate business for about 10 years now. Prior to that, I've got other business ventures, which actually I'm still involved with, related to financial services. So I still have financial service stores with business partners who run that full time. I've really been although I'm active as an equity partner, my business partners run those business have been running those business for the last 10 years plus, and I'm full-time in real estate. I've got assets primarily in Illinois. I do have doors in South Carolina as well, and a few things in Wisconsin.
Beautiful, beautiful. So you're not a newbie at all. And the first question that I like to have now, it has to do with tolerance for risk. So if I hit this right there, boom, it is. Can you please fill in this blank? There are many popular investment asset classes, but I think blank is too risky. How you feel about that one?
I would probably either throw in stock market, which I do have money in the stock market, more in retirement accounts, 401ks, and basic retirement accounts, as well as crypto. I'm intrigued by crypto and the big pop one could get, but I'm nervous to jump in there. I think in the future there could be some major upside, and there certainly is, but those are risky for me at the moment.
Yep, definitely. Yeah, I completely agree. I like that. Thank you for that. And so the next part is talking about motivation. So sometimes I get some newbies on this show, and I like to go through motivations because everybody knows why they're getting involved, even before they know what exactly they're going to be doing in it. So that's why I like to go through these. And these really are distinct. They tell me a lot about the commercial investor who's my guest. So the first motivation I found, some people, they're making more acquisitions because they're looking to preserve their purchasing power. In other words, they probably have the assets already and they use the cash flow from the assets they own to make ends meet. But when inflation rears its ugly head, they have to make new acquisitions, because if you just liquidate some assets, then you're really losing out if that's your model there. But you have to keep on making acquisitions to increase that cash flow, borrowing against the assets you already have. That's not what I'm up to. That's not my primary motivation. My bigger one is trading time directly for wealth. And the reason for that is because I've got a background in tech. I own my own CRM agency. So that means, like, the problem with tech is you're getting a high salary or high wage or whatever, but that also means you're paying more tax than anybody in the form of income tax. So it hit me as like, well, how can I pivot to focus on the accumulation of equity, aka wealth, instead of getting this income and then giving out like half to the government? So that's what I'm up to. But the most frequent answer you find people getting into this business is because they want to take control of their time. They want to leave that door open for retirement or fast track it, but maybe they just want to work fewer months per year or fewer weeks per month or fewer hours per week. So that's what some people are doing. They're really great. They're looking to wind things down. But this next group, they're never going to wind things down. They're just plain ambitious. They're focused on that generational wealth. They want to buy their entire hometown, and they want to make sure that their great grandchildren never have to hold a day job. So that is great because they're going to be hustling into their 90s. That's fantastic. Just like the last group of people who I identify them because they've found a sector of society, or maybe it's the environment, or maybe it's animals or something like that, but they want to have a huge impact, and they realize that there's a financial element to that. Okay, you need to have that financial backing if you're going to make that big impact on society. So that's what they're up to. I like to say that they're trying to save the world. But Ira, of those 5 different motivations, what combination of those describe you best? What resonates with you best?
I have to say I'm probably a hybrid of a few of them that you mentioned. I certainly, I'm probably not a transactional guy where I'm looking to just do transactions. If you ask me how I approach the the multifamily real estate world, I would say I'd like to buy, hold, and keep forever.
Mm-hmm.
If you asked me that a few years ago, I probably would have said that. I've since then have changed my tune a little bit. I'd still primarily like to buy and hold and keep, but I think there's a time and a place to buy, make some money, obviously improve it, get the NOI up, etc., and then sell it, and then re-employ that money in other investments. I'm not looking to go buy a fancy car or buy more and more things, but I'd like to take that money and convert it from X units to 5X units, etc. Something to that effect.
Mm-hmm.
Certainly, one of my goals is to preserve wealth. I'd like to buy assets, and I'd like to have passive income as I'm getting older, as I'm getting to retirement. And I really like to do this I've got no reason to retire, and I have no wants to retire. I would just like to do it on my terms. So I'm still, I'm not a kid anymore, but I'm still constantly hustling, looking for opportunities, looking for partners. I've got a lot of energy, and just looking for more deals. I'm not a deal junkie, but I like the thrill of the chase and finding good opportunities out there. Another component of it is my oldest son's got special needs. So I want to always make sure that my son is always being taken care of. In the last 6 years, my wife and I we bought an apartment building, and it's for young adults with special needs. And my son and actually my nephew has got the same disorders as my son, lives there. It's a beautiful apartment building. It's 3 miles from our house. And we want our kids to be as independent as they can, and to have a fulfilled life, and just be active, productive members of society. So one of my main goals is to provide for my son as well as his other housemates. There's 9 of them living in our 8-unit apartment building. We have coordinated a not-for-profit company to handle the recreational and social, and help fulfill their days and weekends and weeks. And it's a phenomenal program. My wife, more so than we've looked around the country and looked at different programs, similar type of programs, and we tried to pick the best of the best, and we tried to open that up for our son. And that's a big piece of who we are and who I am. And we also speak to a lot of families and tell them how we did it, and try to help them along the journey, because it's challenging. It's challenging. Kind of out of school, and that's the next step.
Yeah, that's really beautiful. Yeah, that's exactly what I hope to hear from people, is something more than just the obvious part. Is like, well, I just want to see a bigger number in my bank account. It's not the same. But let's move on to the next part, which is into the core competencies thing. Once again, if you go to dandoesdeals.com, you can actually download and print out your own copy of the Dan Does Deals commercial role die. It's got the 6 different roles. And the main reason why I'm doing that is I want to make sure that you can effectively communicate on the topic of commercial real estate, but also I want to make sure that you can see how my guest fits into the deal as a whole. All right. So I always go through them right from the start. So let's start off with the repositioner, because everybody is to some degree a repositioner. They're acquisitions people. They're looking at a bunch of different deals. They're doing a bunch of paperwork. And what are they doing with all that? Well, the first thing, there's a fancy word for it, which is underwriting. So they're underwriting the deal. They're doing the arithmetic. They're doing the math. They're saying, first of all, is this building actually making the amount of money that the seller says it is? And then they're thinking, it's like, okay, well, how can I reposition it? Okay, like how can I change the property so it's making even more than it was before? So the main tools that a repositioner has in their tool belt to find upside, the first one is finding more advantageous lending from financiers. A financier is a person who deals with only paper and money. Okay, so if they have better lending available to them, then it makes it an easy way to find upside. But usually the first place they're looking is more efficient operations. They want to stop those Benjamins from going down the toilet. But there's a lot more than unclogging toilets and mowing lawns, taking out trash and all that kind of stuff to operations. Like one of my fortes is marketing. And the reason why marketing is very important is because that keeps the vacancy rate low. You know, I also have some other fun stuff that I can do in my capacity of web development and all that kind of stuff, but we'll leave that for another time. So operations, you know, there's only so much room though that you can really achieve as far as finding the the upside with more efficient operations. So often they end up getting a contractor team to fix the place up, make it nicer. They do the renovations, they do the upgrades, they do the value add, as people like to call it. And that way the units are actually nicer, so people have no problem paying extra in rent. And so there's some upside right there. But if the repositioner is like me, I have this unfortunate situation where I'm from the internet. And so that means I need locals. I need boots on the ground, somebody who lives nearby who can be there in an hour or two, because that's not going to be me. So the local is going to be looking at the contractor's work, making sure they're not cutting corners, using substandard materials, stuff like that, making sure they're keeping to schedule. They'll also be doing the same thing, you know, accountability for operations as well. And so that seems like all the owners, but of course the financiers are also owners as well. But if the repositioner has the property in mind and they turn around to the financier and say, hey, this property is tens of millions of dollars. Can I borrow, say, tens of millions of dollars so I can pick it up? Well, the financier is going to have another question on their mind, which is, who's your KP? And what that's all about is, like in a lot of coaching programs, they'll really gloss over this part. But if you want to be eligible for the loan, it doesn't matter if you're Bill Gates or Jeff Bezos or Elon Musk or whoever else. If you want to buy, let's say, a 350 unit apartment complex, then to be eligible for the loan, you need somebody in the fold who already owns a similar asset, or they're just going to say no. On top of that, you need a couple other things. You need a certain amount of liquidity. And then also the GP team combined, they have to have a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So Ira, I know that you've already said some of the details about what your core competencies are, but let's just, you know, there are lots of virtual assistants who watch this and are just waiting for the right answer. So what are you most likely to contribute to your next deal?
I have to say, you know, over the last 10 years or so, asset management is probably my strength. I've kind of worn a lot of hats over this period, finding deals, you know, doing my underwriting, you know, talking to the banker. So I've worn a lot of hats, and that's kind of one of my struggles, and I need to kind of focus in a little bit instead of trying to do 12 things. I mean, my background is accounting, so many years ago I worked for an accounting firm. So I even do more accounting than I should be doing. You know what I'm saying? Although I do have an accountant who handles the corporations and the LLCs and the tax returns and stuff, but I still things kind of blend together, and I'm doing a whole bunch of everything. But I'd say my core competency probably would be the asset management. I mean, of my properties, I've all the properties I'm involved with, they're all JV deals. It's myself, a partner, or maybe two partners. I have never really played the syndication. I've gone down that road. I'm not saying I wouldn't, and I certainly would welcome it if it made sense. I think that's just another kind of tool in the tool belt to have. And I certainly would welcome that opportunity, because scaling certainly helps if you've got, you know, more partners, bigger team, and, you know, more financing. But with that being said, the properties I've been involved with, I've been doing the asset management, and that's probably my strength.
All right, beautiful. And so then the next question has to do with the properties. And when commercial investors are talking to each other and they're saying like, okay, what's your ideal property? What's your buy box look like? They're really asking for three things. The first thing is the geography. Okay, so where is the property? So what state, what county, what neighborhood? Okay, that's something that they're absolutely going to need to know to label it ideal. The second thing, it has to do with the size of the deal. And we're talking mostly about multifamily here. And multifamily is the same as retail and self-storage, offices, also mobile home parks. And the way that you find the size is you talk about the unit count. Okay, so how many units are in the deal? If you're talking about industrial or warehousing, it'll be square footage. But you gotta know the size of the deal for it to be ideal. And then the third one, they have the same word for two different things. It's called class. The first meaning of the word class, it's the condition of the building. So is it old and beat up, or is it brand new and immaculate? And where is it in between? That's the first meaning of class. The second meaning of class, it has to do with the crime rate and the school districts that the property are in, that sort of stuff. And both of those two meanings of class are rated the same way, just like in grade school, with like, you know, C minus, B plus, and so on like that. So Ira, as far as properties where if it falls in your lap, it's way easier to say yes to it, and it's way more difficult to say no to it. What are you looking for?
Yeah, I'd probably say that value add plays is kind of my sweet spot. I like those B minus, C plus areas that I could convert, that I can add value to, and through various operational efficiencies, and improve them to a higher asset class. I probably own everything from an A building in an A neighborhood to probably a C is probably my lowest. I'm not as comfortable in below the C world, unless, you know, if it's a C minus and I could get it up, that's another story. But if it's real super tough areas, it's just not my core competency. As far as size, I'm presently involved with as small as 3 units and as high as 156. So I own properties in that spectrum. As far as as far as the right number, I don't know, the last couple of deals I bought were in the 20s, low 60s. But you know, it's tougher and it's very competitive now to find deals. So I'm kind of trying to stay under the radar a little bit, staying in the 40 to 80 range. But if I found, you know, I'm playing around with something right now that's 167. I'm not sure if it's going to happen or not. I'm just doing my due diligence on it right now, or underwriting on it. And I don't think it's going to happen, but if the right number happens, I'm interested.
Beautiful. I love that. I especially thought it was kind of funny you talking about how you try and stay out of the sea world, because I'm like, are you afraid of orcas? Anyway, that's some silliness. That's a different kind of real estate entirely. But the other thing I wanted to ask you, and it stems from, like, you mentioned that, you know, you personally wear too many hats, and quite frankly, you know, all of us, you know, we can't really be a great job of all of them for any real substantial amount of time, but we do need everybody in the team. And one of the things that really jumps out, though, is that each investor is able to help another specific type of investor or syndicator, operator, whatever, disproportionately. Me personally, because of my marketing and tech background, all that kind of fun stuff, I'm always on the lookout for more sponsors and KPs. And that's just simply because marketing is about adding fuel to the fire. It's not just grunt work. Okay. So I'm better off helping people who already have some sort of foundation in their business. Otherwise, you can just basically get anybody to do the typical work. So that's who I'm looking for. And Ira, you said you don't do any syndications right now, so you don't really have to be concerned about the SEC restrictions of that. But who are you best suited to disproportionately help in commercial real estate? Who are you looking for?
I probably, what I didn't mention earlier is the type of assets I look at right now are
Mm-hmm.
that I own and look at are either traditional apartment buildings or
Mm-hmm.
I own affordable properties as well. So the affordable properties that I do own are HUD properties typically with HAP contracts. HAP is a
Mm-hmm.
contract with HUD, and 20-year contract is a pretty typical size. So I do own some of these assets in C areas. Once again, I'm in a war zone isn't my comfort zone. So there's plenty of people who are great at it and that's their niche and they do well and make a lot of money. That's not once again, isn't my comfort zone. But I get calls all the time with people who know that I work in the affordable arena, and they come across a HUD deal, and they say, "How do I do this?" In fact, I got a call yesterday from a guy. He had 2 properties in North Carolina. One's 40-something units, one was 30-something units. Because I know nothing about this asset class. Would you be interested in partnering? I'd say
Just take
I
a
need
look.
A, B, C, D, E. This is what we need to do first to get from the guy to see even if it's worth exploring. So I try to help people in that arena. I certainly, if it makes sense, I would certainly consider partnering with somebody. If I'm comfortable with them, they're comfortable with me. They check me out. I'm all about total transparency. I want people to know, that I've, working with the same accountant for the last 20 years. My attorney I've been with for 15 years. You know what I'm saying? So, vet who you're going to work with. I think is really important instead of just, hey, I met somebody on a Zoom call and I'm about to write a check for X,
Right.
So I'm all about that. If I could help people in the special needs world, I've helped people find startup programs like my wife and I have started for our son. I've helped people find. I'm a licensed broker in the state of Illinois, which I really don't do a whole lot of real estate brokering. I really don't. It's really more for a friend or family. But I've helped people find a condo for somebody who's got a child with special needs, but kind of help them find that right place. So it's about helping people. It's about making a difference in the world. And I believe in karma. What goes around comes around. And I want to help people, and I hope I wish that good things come to my health and happiness come to my family and myself. You know what I'm saying? And my friends. So.
I love it. So it sounds like repositioners are highest on the list of people you want to meet up with because they'd be bringing more deal flow, looking for like have more deals in hand, right? That's about right.
I think finding deals is always, I think, is the keys to the kingdom. I mean, if you find the right deals, everyone says money comes, in which I think is a generalization, but there's something to it. If you got a great deal, there'll be people involved. People who want to get involved with you. So, I'm primarily in Illinois because that's where I've been for. That's where I started from. One of my main business partners is a buddy of mine from college who's been doing it for 30 years. But I'm very bullish on the Southeast. I do have property in South Carolina, right out of Charleston. I like the Southeast, the Carolinas, Tennessee, Georgia, Florida. So, I like those areas. I think there's just great stuff going on there. So, if I found somebody who's got, interesting deals, I certainly would, like to offer what I could to a team. I could help raise capital too. I've got, that's another avenue that I got some strength in as well. If deals make sense, I can help find the money.
Beautiful. Yep, that's great. So, right, and then I was just thinking about syndications and the exciting part about that. The main thing is that you have to document your relationships before you start even mentioning private deals to people that you're looking to take money for. So that's the main thing that I just want to add for that. But as far as the best way to reach out to you, we ended up meeting through some meetups that I found in through LinkedIn, which is the easiest spot to get a hold of me, I'd say. But how about you? Is there a website that's better, or is LinkedIn best? What's the best way to reach out to you?
LinkedIn is easy. Just Ira Fishman, and actually I don't have all the parameters with me right now, but you could even, look me up on LinkedIn. I'm not the most active guy in the world, but I certainly, if people send me stuff, I'm happy to respond, happy to check it out. You can email me at ira@landstarrealty.com, and I'd be happy to set up a time to talk, and whatever I could do, happy to do it. Those are probably the two best ways to catch me.
All right, beautiful. And so the only thing that I have to say still, it's actually for you in the audience, which is that under my left hand here, you'll notice there's a big, ugly red button. It says subscribe on it. And you don't want that. I don't want that for you. Nobody wants you to have to, have you ever actually looked at really looked at that red button? Because it's your eyes. It hurts so much. You got to get rid of it. And the only way to get rid of this awful button is by clicking on it. And that's cool because it's free to click on the button. It costs you absolutely nothing. You don't have to enter your email address. It doesn't send me anything. It doesn't mean I'm going to spam you or whatever. I can't. And but it does have one thing that is in it for me, which is it means that YouTube will start paying for these videos instead of me. That's what I really, really want, and I consider you, doing me a solid if you help me out there. But what it really does, just for full disclosure, it means that my videos might show up on your list of suggestions, and you can go ahead and ignore them. That's perfectly fine. I just appreciate you spending this time with me, just like Ira. I appreciate you spending the time with me on this. It's been great getting to know you better.
I appreciate it, and I don't know, like so many others, but I need help in other areas, and I absolutely would love to chat further with you about some of your expertises in the computer world and the marketing world. That's definitely one of my weaknesses, and that's something I'd like to shore up. That was kind of one of my 2022 goals, and been working at it, but not as efficient as quickly as I'd like to. More process and procedures, I should say.
Excellent. I look forward to it. We'll do it right after this. Thanks for watching. See ya.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.